by the end of this video, you'll know exactly which of these two cryptocurrencies is the better investment for you. And I'm going to be honest with you. The answer is different depending on what you're actually trying to accomplish. So I want you to sit tight for the next few minutes because I'm going to break down 3 real comparison points, and the third one is going to surprise you. Spoiler, it has nothing to do with price. Let's start with the obvious one, and it's the reason most people first hear about either of these assets. I'm talking about store of value, and that's the category where Bitcoin simply dominates. Bitcoin was created in 2009 by the pseudonymous Satoshi Nakamoto, and its entire design philosophy centers around scarcity. There will only ever be 21 million Bitcoin in existence. That's it. No central bank can print more. No government can dilute the supply. That hard cap is baked into the code and it cannot be changed. When you look at the history of store of value assets, that predictability is everything. Gold became the global store of value precisely because it was rare and couldn't be manufactured at scale. Bitcoin takes that same concept and hardens it into mathematics. And here's what happened in the past few years that most retail investors completely missed. In 2020, MicroStrategy, a business intelligence software company led by Michael Saylor, started buying Bitcoin as a treasury reserve asset, not a few million. We're talking over 400,000 Bitcoin accumulated across multiple purchases. They even issued convertible bonds specifically to raise capital for more purchases. Then came the institutional validation that nobody expected. In January of 2024, the Securities and Exchange Commission finally approved spot Bitcoin exchange traded funds. BlackRock, Fidelity, and Franklin Templeton all launched funds, and within weeks, billions of dollars poured in. By February 2024, the combined Bitcoin ETF holdings had crossed $40 billion. That is institutional money moving at scale, and it fundamentally changed who owns Bitcoin. This isn't retail speculation anymore. This is retirement funds and pension allocations moving into the space. Now, is Ethereum a store of value? It can be, but Ethereum's supply is not capped. Under its current proof-of-stake system, the network can issue new Ether as rewards to validators and the supply expands. That doesn't mean Ethereum is bad. It's actually an intentional design choice for a different purpose, and we'll get to that. But when you're asking which asset holds its value more reliably as a standalone investment, Bitcoin has a structural advantage that Ethereum simply doesn't have. That's point number one, and it's not even the interesting part. Here's where it gets more complicated, and this is where Ethereum really separates itself in a way that matters enormously if you're thinking beyond just holding. I'm talking about programmability, and this is where Ethereum is in a league of its own. Ethereum isn't just digital money, it's a platform. It functions as a decentralized computer that developers can build on top of. That means you can create financial applications, decentralized finance protocols, lending platforms, synthetic assets, all running on the Ethereum network. And this ecosystem has grown massive. As of late 2024, the total value locked in DeFi protocols built on Ethereum exceeded $60 billion. That's real money, not theoretical value, actual assets being managed by smart contracts on the network. No bank required, no broker, just code. And if you want proof of how powerful that network effect has become, look at what happened with NFTs. In early 2021, a single digital collage by an artist named Beeple sold at Christie's auction house for $69 million. The entire sale was conducted on Ethereum. That moment wasn't just about art. It was a global announcement that Ethereum could support an entirely new creative and financial economy. And the infrastructure built on Ethereum since then. Marketplaces like OpenSea, protocols like Uniswap, they process billions of dollars in transactions every single month. The technical backbone improved significantly too. In September of 2022, Ethereum completed something called the merge, a complete transition from proof of work to proof of stake consensus. This was a massive upgrade that reduced Ethereum's energy consumption by roughly 99.5%. It also changed the issuance rate of new Ether, effectively making Ethereum more deflationary over time. The network went from a model where miners consumed more electricity than some small countries to a system where validators can operate on modest hardware using minimal energy. That is a fundamental architectural shift, and it happened quietly because the mainstream financial press barely covered it. If you found this comparison useful so far, a quick subscribe really helps me keep making videos like this. And I'm about to give you the piece that most financial content glosses over entirely, so stay with me. So, here's the question that nobody in the crypto space wants to answer simply. Which one is actually a better investment? And the real answer is, it depends on your timeline and your actual goal. Bitcoin as a store of value has a track record that Ethereum simply doesn't have yet. Bitcoin crossed $60,000 in March of 2024. It has been around since 2009 and has survived multiple market cycles, regulatory crackdowns, exchange collapses, and media skepticism. If your goal is to hold something that doesn't require you to actively manage it, and you want the highest probability of preservation over a long time horizon, Bitcoin's institutional adoption and hard cap supply make a strong case. The spot ETF approval alone means large financial institutions now view Bitcoin as a legitimate portfolio diversifier, and that changes the demand dynamics permanently. Ethereum, on the other hand, is a bet on the future of the internet's financial infrastructure. If decentralized applications, digital ownership, and programmable money become as widespread as its proponents believe, Ethereum's utility demand could dwarf Bitcoin's. But that's a bigger assumption to make, and it requires more active understanding on your part. You need to track network upgrades, developer activity, and competitive threats from networks like Solana and Polygon that are trying to solve similar problems at lower cost. Ethereum is a high utility, higher effort investment. Bitcoin is a high conviction, lower maintenance one. Here's what I see that nobody talks about enough. These two assets aren't actually competing for the same thing. Bitcoin is digital gold. Ethereum is digital oil. Gold sits in a vault and holds value. Oil gets used, refined, and burned to power things. You probably want both in a diversified crypto allocation for different reasons. But if I had to pick one based purely on the investment criteria that matter most, track record, institutional adoption, supply certainty, and risk-adjusted return over the past 5 years, Bitcoin has the edge in reliability. If you're willing to put in more research and want exposure to the growth of the decentralized web, Ethereum offers higher upside potential. Neither is a sure thing. Cryptocurrencies are volatile, regulatory environments shift, and technological disruption can invalidate even the strongest networks. But between these two, the fundamentals are more solid than almost anything else in the space. Do your own research, understand what you actually own, and don't invest more than you can afford to lose. That's not a platitude. That's the actual lesson from every cycle. If this helped you think through the comparison, share it with someone who's trying to decide between the two, and hit subscribe. I've got more deep dives coming on crypto, investing, and building real wealth in ways that actually work.